Hey guys, this is a market update. In this video, a bunch of economic figures that show how everything is about to change. We're going to go through that in this video and some correlations between what's happening with Bitcoin and the stock market, because as you can see here, this is not a market where everything is performing. Some things are and some things aren't. So we're going to go through that in this video and how it affects Bitcoin and crypto specifically. Firstly, when it comes to the Bitcoin price, like I said in previous market updates, what may catch a lot of people out here is actually not an up move or a down move, but a consolidation that seems to be playing out for the time being anyway. We've got a support level here which could easily be broken. But I think this is going to be dependent on what's happening in the real world, right? With the debt ceiling negotiations, if that's going to be pushed back or what's going to happen there. It's obviously going to affect things. What we can see here, though, is, a bearish or a sort of weakening of this massive narrative that pushed us up right here, from the lows, the kind of bank crisis. And you've seen this kind of weakness, in the price action right here, weakness in the strength down here. So definitely some weakness. However, we've definitely come out of this phase, this uptrend channel right here, as you can see. But the market is trying to find a support level and not just move down. So for me, a potential consolidation rather than anything tradable to the up or downside. However, what we're seeing here is, a very decent price level of support. But obviously we're testing this support. The more we test it and the more we get some kind of weakening, maybe you can see a break of that. But for right now, I think it's just a consolidation, waiting for the next phase, waiting for the debt ceiling to be potentially sorted out, which may actually be some good news. However, some bad news on the side of that as well is that if the debt ceiling is negotiated, the Treasury will start to issue more debt, which is obviously going to mean essentially more debt flooding into the market. Yields could actually rise, which potentially isn't very bullish for risk assets as well. So for right now, you have these two factors which are putting us into what I would say as a kind of consolidation into here. So nothing much to trade at the moment. However, we're going to look at all of these economic indicators which show something's going to change massively. If you are a trader, deposit bonus on Bybit up to $30,000. Check the details via the link in the description to trade on Bybit and get that deposit bonus. We've seen Bitcoin and crypto perform very well this year, but come off recently. Like I said right here on the chart, just a bit of weakness or consolidation. So what's going on right here? I think it's just trading narratives and flows that we're seeing right now. So we had this huge move up in Bitcoin and Ethereum during the banking crisis, which means that they are, at least from a narrative standpoint, being seen as like precious metals, almost like gold, where there's, if there's a big problem in the banking system, maybe people try and trade gold, Bitcoin, Ethereum, tech stocks because of potential monetary debasement to actually kind of bail out potential bank failures. So that trading narrative pushed us up. However, as you can see recently, things have diverged. I think this is a trading narrative. All of this has finished from the crypto side. You're just in a kind of no man's land period, whereas the AI narrative is pushing tech stocks up. You can see this more clearly here. So what we're seeing is technology in America being pushed up and pushing all indexes higher, but the rest of the index going nowhere and being basically zeroed, right? So no growth in prices or anything. So that shows us that what the market is now trading is essentially very weak economy, no growth economy, inflation probably coming down, which means central bank rate hikes are probably done for the most part, maybe one more, we don't know. But that narrative has turned now. And tech is taking off because it's the only area where people see growth, potentially in AI and those products, boosting profit margins at those companies and other tech stocks, as you can see. So what we're seeing is a very weak underlying economy and tech taking off. And I believe over the longer term, you're going to see that benefit Bitcoin, crypto as well. However, it outperformed during this part, and maybe it's just in a consolidation cycle right here as other narratives take part in other parts of the market. Moving on to leading economic indicators, we can see a huge drawdown in the real economy right here. And this is usually a very good predictor of recessions. So we can see we're at similar levels to previous recessions. Now, what this really means is at this point in the cycle, the thing that will outperform, in my opinion, is anything with a relative amount of growth. So you're seeing, tech stocks with predicted growth way outperforming stocks that are more representative of the normal economy. So obviously growth is going to outperform in the next phase of the cycle, in my opinion. 12, 18 months to play out, because these are economic cycles. But as you can see here, these recessions are met with policy responses from central banks to become easier in their monetary policy to try and ease the market and pump liquidity into the market. And so we can't predict exactly when that turn will happen, but the market is trying to front run it already, as you've seen with, Bitcoin crypto prices moving upwards, tech prices moving upwards. So to be around that and in that trade is, the trade that I think is going to be happening over the next 12 to 18 months. Also seeing Raoul Pal here as well, just showing us a correlation between the NASDAQ and global liquidity. Very, very correlated, right? So as global liquidity increases, which is trying to, stimulate growth and demand, then you're seeing the NASDAQ obviously correlated with that very highly. And the next phase of the cycle, in my opinion, would be trying to stimulate demand again, rather than what they've done over the past 12, 18 months, try and take it away. Now, when exactly that will happen and when the policy response will come, we don't know, but you have to try and, trade and dollar cost average into that turn. Now, as we can see here as well, the federal funds rate is now above CPI. CPI is not the inflation figure that the Fed is going to look at. They look more at PCE. However, as you can see here, it's a good indicator of when the Fed funds rate is actually above CPI. That's usually when they stop raising rates. Maybe one more rate hike. We don't know what they're thinking on that, but it's usually a good sign of, they're kind of done right now. They don't need to raise rates anymore. And you've seen the leading economic indicators really coming off as well. So the market is trying to trade that pause in rates, because what comes after a pause is usually seeing the economic data come out, and then obviously everything changes again to try and pump more liquidity into the market. And that usually has a good correlation to asset prices for growth assets. Bitcoin and crypto is a growth asset, of course, as well. Although Bitcoin itself specifically does have a slight correlation to the gold trade as well, especially when you're seeing, bank run fears as well. So it's an uncorrelated asset which has growth and also some other correlations. But for right now, a consolidation after a very good run. But the next 12 to 18 months, especially with what's happening with rates and the halving, is really the time to be in the market, in my opinion. If you are a trader, though, deposit bonus on Bybit up to $30,000. Check the links in the description to the deposit bonus and also the crypto investor course if you want to see my trades and get involved with the private Discord groups there down in the description below. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.